Welcome back to the Farms in BC podcast. Now, for the first quarterly update of 2025, we're going to be going into some of the interest rate changes that occurred here in the last 3 months, as well as how that affected the market conditions, and a little bit more about what we're expecting for the tariffs and how that's going to play out moving into Q2 of 2025. Stay tuned. Well, Nav, we started off 2025 with a bang. We expected, December ended such at a high note for us. It was super active. It was very, hopeful coming into 2025 that we would have an active year here. In fact, we did for the first month or so. I mean, it was a little bit aggressive starting out, but it mellowed out real quick after that, right? And a lot of the reasons why is because of the tariffs.
Yeah.
So much uncertainty. Even in the last podcast, we discussed, that it's not fully panned out. It's not fully laid out what's going to happen with the tariffs. And, 3 months here down the road, we're still not 100% sure.
That's right.
Right. And so it's kind of one of those things where we still got to wait and see. But how has the market conditions been? What have you seen in the last 3 months? What's going on?
Yeah, like you said, January, we were busy, very busy. Sales were good. Call volume was good. Showing volume was good. Listing volume was decent. And started right when the tariffs talks started being announced. We really didn't know what to expect. One, we didn't know how it was going to affect us. Well, we still don't know how it's going to affect us. And I think once the talks of tariffs started happening, we started seeing this decline of call volume, showing volume. But what didn't stop was listing volume.
Mm-hmm.
We've been averaging about close to 2 listings a week, at least. And it's listings are continuously coming on market. But we're starting to see buyers being very cautious about, should I buy? Should I not buy? Should I wait? So we've seen the call volume started to decrease over time. And I believe now it's probably at its lowest since then. And I don't see it getting better until we get some more clarity.
Yeah, answers,
I think people just want clarity.
You know what it is? It's the same thing in sales. It's the same thing in our business where, a yes or a no is so much better than a maybe, right? And that's exactly what he's giving us this whole time, from the States here. All we're hearing is maybe we'll put this in, or maybe we'll put that in, or whatever.
Or here, let's sprinkle 10% here, 20% here.
Maybe 50.
And then maybe next month I might double it.
Right. And man, it's just the uncertainty of that is not allowing anyone to have any next move really played out in their minds. So how can they make a big investment?
Well, you look at investors, they can't plan. You look at people that are running their businesses, they can't plan what to order, how much to order, can they grow, should they hire new staff? So much uncertainty. They can't make a move until they know what the next 4 years are going to look like, right? So everybody's in that little limbo stage. I'm seeing a lot of our clients are all business owners. Majority, I would say 99% own other different multiple businesses. And talking to them, they're starting to really just try to stay as lean as possible. Keep things status quo, keep things moving, but keep them there. Don't be looking to grow, not take on big risks. Just keep things moving until we have some clarity. So I think for the first quarter, the call volume has tapered off. Sales volume obviously is going to taper off because of that. But listing volume has been consistent.
Yeah. And I think we're seeing that in the residential world as well. Like listing volume has increased substantially. I think it's at an all-time high since 2019, I believe.
Yes.
So I mean, that is within itself kind of catering. We're kind of coming closer into that buyer's market if we're not already in it. I'd say
we're definitely in the buyer's market.
I'd say we're definitely leaning that way now.
Yeah.
And that's it's something that we have to discuss with sellers, right? So the sellers have to understand that it's not the highs that we thought we were going to be in 2025. Everyone was waiting for 2025 because the rates would go down, the selling price would come up. Unfortunately, we're not seeing that right now.
That's right. One thing I have seen though, specific properties in specific locations that are farms that have specific infrastructure are still selling.
Yeah.
Because there's specific buyers looking for specific items. And like, every farm is different. Some might have bigger buildings on it. Some might have this phenomenal house on it. Some may have crops on it. And there's buyers looking for that. So I know we always give this narrative as a whole for the market, but in Surrey, we sold a 5-acre at record price 3 weeks ago. Yeah, 2-3 weeks ago. And we've got other 5 acres that are barely getting a call. Mm-hmm. That 5 acres actually sold higher than some of the 10 acres that are listed. But prime location, specific location, had specific utilities, had specific infrastructure that specific buyer was looking for. So again, things are still moving if it's fit for that buyer's specific type.
Yeah, so it comes back to these are all unique products and they all have their pros and cons. It just comes down to that evaluation on that. And then playing it against the market and seeing where it fits.
That's right.
So, how are buyers supposed to look into this now? Like, there's a lot of buyers that are on the sidelines and tariffs are still looming. We don't know how to move forward.
Yep.
What would you recommend to them?
Well, buyers, it's the ones that are cash ready, don't have to sell anything, are actually, we're still working with them and they're pretty aggressive, a little bit too aggressive. They know they've got negotiating power. They've all been writing aggressive offers and we're seeing what sticks. But some buyers that we still can't find the product that they want. They're very specific in what they want, where they want it. And we can't find the product. So yes, there's high inventory, but not the right inventories for these specific buyers. A lot of these buyers still have to sell something in order to buy. Right. So they might be stuck on that end. But what I've seen the buyers do is they all want a deal. And I think that's kind of where we're at now, where it needs to be priced very aggressively, not at market, aggressively. In order for you to try to even outcompete all the other listings that you're competing with. Because in every single city, there are a lot of listings now. We saw a massive uptick in Surrey of farm properties for sale, seen a massive uptick in Langley for farm properties and Abbotsford. Yeah. Chilliwack, not so much. It's still quite consistent and a little bit on the lower end. I'd say the same thing for Delta and Richmond.
Seems like it's a great time to buy luxury as well. There's a lot of luxury products that are kind of priced sharp right
Very
now
sharp.
Like
there's some products I'm looking at that are estate properties. You couldn't replace it for the cost you're buying it, even with a discount on the land. Yeah. And I'm like, if there is someone serious looking for that specific product, those ones are a little bit more challenging because these custom homes are custom for that. So you've built your dream home. Now you're wanting a buyer to love your dream home. So that's always been a challenge. But definitely price very sharp. And we've written some offers on some of these estate homes. You'd be surprised how much negotiating power you have if you're a buyer out there.
Yeah, opportunities out there.
There is a lot of opportunity. You're not going to get it at 50% off, which some of our buyers try. And we know they're not going to get it at 50% off. But there's definitely deals to be had, for sure.
Yeah. On that note.
So just be aggressive.
Yeah.
If you're a buyer that's looking to buy in this market. Don't be afraid to write offers. Don't be afraid to offend anyone. An offer's an offer. And
on the same line of thought, even sellers should not be offended that they're getting offers at this low stage.
Yes.
Work with them and see where you can land.
Well, I think that's what the discussions we're having with our sellers. You're putting your property for sale. It's not a seller's market, and really explain the habits of how the market was in 2022, 2023, and even 2021, where you can negotiate a lot aggressively. Here now you can't. If you're a serious seller and you want to sell, negotiate. Don't get offended. So that's the advice we give before we take the listing. Don't be offended if there's a lowball offer that comes in, and let's try to work with the buyer to see if we can come to a reason. And there's some sellers that would like to sell, that are listed, are not in any financial need, or and they're not eager to sell, so they'll hold their price, and that's fair enough.
So it looks like interest rates are still continuing to trend downwards.
Yes.
We were thinking that it's going to be a hold here in March, but it actually turned out to be a 0.25 reduction.
Correct.
Maybe tell us about that.
Yeah, I don't think anything's changed in the market. I think all of 2024, every seller, every buyer, every realtor, every mortgage broker was waiting for next interest rate to come down, assuming the market would pick up. What we've learned in the last 6 months of 2024 is that that's not the case. And I think a lot of it comes down to affordability. It comes down to availability of equity to move the money from one property to another. So you have to sell. It doesn't matter what interest rates are going to do. Yes, you are going to be able to qualify for more money. Yes, the payments are going to come down. There is some relief with the interest rates. As interest rates come down, I don't see in 2025 that that's going to be the driving force that's going to get this real estate market going. I think it will once the tariffs come off, but it's going to take time for that to ramp up. It's not going to be the tariffs are solidified and now we're in a position with low interest rates that you're going to see this trickle effect. I can see it take months after that. But definitely, let's talk about the last quarter of 2024. Interest rates were trending down, and they were much lower than the beginning of 2024. No tariff talk. We were busy. That indicated to me that interest rates did play a factor closer to the end of 2024 when they started getting to its really low point. Tariffs came. It didn't matter what the interest rates did. This is still a lot of uncertainty out in the market. As interest rates come down in 2025, you're going to see tariffs get solidified. There might be the deal that the free trade agreement that Canada and Mexico has. If that gets renewed prior to the actual expiry date in 2026, you may see that the market pick up because we might hit a perfect storm of low interest rates, no tariffs, the economy, everybody being pro-economy, provinces, municipalities, federal government. You may see this ramp up, but it's going to take time. But I do see that there's light at the end of this tunnel.
And I mean, that's the thing. We don't know when the tariffs are going to come in or if they're going to come in at all. We don't know how that's going to affect anything. And I think the best way to go about it is to actually do your applications, get pre-approved, be ready. Because if that perfect storm does happen, you're going to be ahead of the game.
Actually, the smarter buyers are actually buying now.
Yeah.
Well, I wouldn't say they're smarter. The ones that have a cash available, they're all buying right now. They're buying because they know, they're going to get the terms they want. They know they're going to get the price they want. They're going to have the selection they want. And come 6 to 8 months from now, or whenever this gets solidified, it can happen anytime now. That's when you're going to see a panic of those same buyers that are sitting on the sidelines. They jump in first, that are cash ready. They jump in first. Then the people that need to sell something to buy after will come in after. The people that are completely liquid right now, that are a little bit more aggressive, that have been through these cycles before, they know what's going to happen. We know what's going to happen. But they take the risk because they're experienced. Yeah.
Now, for the second quarter of 2025, what are we expecting in terms of prices?
I think prices will stay consistent for the most part. The only determining factor I see is inventory. If inventory keeps at the pace that it is currently right now, you will see some potential downward pressure. You might see, it's tough to put a percentage to it, but definitely we are seeing on a daily reduction. They are slight, but if this lasts for a long time, then you're going to see at the end of this next quarter, you'll probably see this downward pressure on a lot of the products, right?
Yeah, it's just inventory. I think inventory is
going to be the main driver.
And if it continues to go higher, which we are thinking it is going to go.
Yeah. Well, I think some sellers that don't need to sell, that were just putting it on the market, but even we're priced okay. They're not. We're actually having consultations now where we're thinking, okay, is it best to be competing with people that need to sell? Mm-hmm. So now you're in a market where you don't need to sell. You don't really need the funds. You can hold for another year. Is it better to put it on the market and compete with a guy that has a similar type product out there, and we know he's going to negotiate way harder and is willing to go way lower? Is it best to just let that inventory sell and then put it back up in 2026? So we're having a lot of those discussions, and I know a lot of our colleagues that are professionals that have been in this business for a very long time. It's the same advice. They're having those conversations for my discussions.
I mean, this is also assuming that there is comparables that are going to be negatively affecting that one, right? So unless it's a very unique property, it doesn't matter when you sell it. It's unique. Yeah,
we've seen price adjustments on bigger parcels, anything above 10 acres across the board. From middle of 2024 to now, we've seen those prices have come down. They're at a place where I think now they will stay quite consistent. Bigger parcels, prices have come down. I think there's I think there was this big correction since the beginning, or I'd say beginning of 2024 to now, that is now starting to look more attractive to a lot of buyers. Yeah, again.
So now coming into the next Bank of Canada announcement that we're going to be seeing here in April, what are your predictions? What are you thinking?
It's scary because, prior to this past announcement, I kind of had a really good gut feeling regardless they're going to reduce it. Now you're looking at inflation numbers came out today. They went up to 2.6. You're going to start see, but then so typically when inflation goes up, you either pause or you raise interest rates. The other factor on the other side is you're going to see a lot of job losses. So unemployment number is going to go higher. Same time, you're also going to see the GDP, you're going to see the economy really come down. You're going to see no growth from now until then. So the Bank of Canada, I think now is the worst time where you're getting pulled from both directions. Now they got to make a decision. Is starting up the economy more important? And let's do another 25% drop? Or let's just hold it. I don't see them increasing it anymore. Even though we should because of inflation, I think they're going to pause. That's my guess. Unless if the economy takes a really bad turn, then they're going to have no choice but to reduce.
What do you think the effects of the tariffs are going to be if, say, they are implemented significantly? Do you think then for sure?
I think there's going to be a lot of big change across Canada. I think there's going to be a lot of infrastructure change. I think a lot of corporations are going to decide, okay, this is now here to stay, and we feel it's going to be long term. Do we move our infrastructure to the U.S.? Do we move our companies to the U.S.? Is the U.S. that big of an impact on our business? Are they buying 30, 40, 50, 60, 70% of our goods? So those companies then are going to have to make a choice. Or they're going to have to decide, okay, we are where we are. Can we find a new market? Can we find a new market in other countries? Can we find better partnerships? So it is uncertain. So big corporations are going to have to make these decisions of what's worth it. Now, like I've got this prediction. I've had chatted about this with a few of my friends. I feel the tariffs are going to come on. I feel they're going to be very short-lived. And the reason being is in 2026, the U.S. have their midterm election. If they do not win the House or the Senate, they're going to have the 2 years after that, they're going to have a very hard time getting anything done in the U.S. because then the Democrats are going to come back in. Now, I feel he's using all of this as a complete negotiating tool. He's putting tariffs on Canada, U.S., which is their biggest trading partners, which he knows he can tax the most. And he's done the same thing to China. These three are the biggest trading partners. Then he's going to put reciprocal tariffs. He's going to keep them on for a bit. He's going to make us feel the pain. But then he's going to start renegotiating with everyone, put the U.S. in a better position than they started, and then you're going to see everything skyrocket. You're going to see the stock market go back up. You're going to see all the confidence come back. Canada will know what our tariff situation is, but at least we have clarity. New deal will be signed. And I believe he has to do it before the midterm elections. And those midterm elections are November 2026. And he's not going to do it a month before. He's going to have to do it 6 to 8 months before to get everything to ramp back up. To make
you got about a year and a half there.
Until the actual voting.
Yeah.
But I think it's going to be
resolved within the next year here.
End of this year, beginning of next. Latest. Is my assumption. Again, I am no economist by far. I'm just looking at what's going to happen, who gets affected, what has to be done, who's in position, how does it affect their role, what's their incentive, right? And you have to understand, tariffs, yes, we're getting taxed. Or are we? Because the more the tariffs they put on, who's actually getting taxed? The U.S. They're taxing their own citizens because the consumer pays the additional tariff. Their cost goes up, their inflation goes up. They can only sustain it for so long. So this is he's raising it and causing havoc, but it's going to be a negotiating tool to bring it all back down, but putting the U.S. in a better position. But what was it named? $1 trillion? Close to $500 billion or $1 trillion of corporate investment already guaranteed. Like, that's insane. And he hasn't even put the tariffs on yet. Well, aggressively, right? And that's his goal, is to bring those companies back to the U.S. Boom, the economy for manufacturing, get as many of these big companies to come back to the U.S.
Now, one of the things that we were discussing in our previous podcast is how a lot of these things are in the positive direction. These announcements that Trump is making in the grand scheme of things was necessary. But, now 3 months down the road, we're kind of feeling the blunt of them. And it's like, you know what?
But I'm going to be honest, my feelings haven't changed.
Yeah.
You have to think of the way people think. He came on and did all of this. But look what change we saw from the province to the municipalities to federal government. We're now talking about removing tariffs across tax between all provinces. We're talking about rebuilding our pipelines. We're talking about tapping into our natural resources. We're talking about building better relationships with other international countries. We're talking about providing our resources to other international countries and not relying on the U.S. So as much as we hate this, I feel, because I have 2 kids, 9 and 11, I want Canada to be a thriving economy. I want it to be a thriving country. In order to do that, we had to do all of this. So I know it feels pain, but a lot of good's going to come out of this for Canada in the long term. And I'm happy that this is kind of happening. It's needed to be happen. We needed, as a country, to be shaken up and not rely on one partner. We need to build multiple partnerships. And I think now, with these tariffs, we are finally opening our horizon and saying, what does Canada have to offer to the world? And where can we offer it, not relying on one country?
The national pride that we've seen skyrocket here alone, that is something I've never seen it. Yeah. And I love it as well, right? This is just one of those things that you go to a Canucks game and, man, look at the energy, right? Like, these things are.
But so from every negative, there's always a positive that comes out. And I've ran my whole life that way. So just don't always just focus on the negative. You got to look at what positives, and there's going to be a whole lot of positive that's going to come out of this.
And that's kind of where I was leaning, because the grand scheme of things, it will be a net positive if you're talking 5, 10, 20 years down the road. For sure. I mean, just the ability for Canada to be wholly connected from west to east is such a big thing.
Huge.
The fact that it wasn't already just felt so wrong in general.
I feel you're going to see a lot of red tape come down on the federal level and the provincial level. You're going to see each province and the federal government, they're going to be pro-economy. They're going to say, let's make Canada boom for the next 5, 10 years.
And we have the ability to.
Well, we've got the resources to. And we've got the railway, which connects end to end. We have pipelines, going to have end to end. We have 2 of the biggest ports, Ontario and BC. We can ship anywhere we want in the world.
Mm-hmm.
So we are in a we will be in a great position to thrive.
And there's a new Silk Road being created. I mean, at the end of the day, it says that the North is the next opportunity.
Yeah.
And we own a lot of the North right
That's
now.
right.
So
Well,
it's
who knows if we might
right,
still own it.
so this is it seems to be that's what he's after, but you never know. Anyways,
Yeah.
I think we're in a good spot where we are, and
I think the future is going to be awesome for Canada.
I'm optimistic. Yeah.
Me too. If they stick to the narrative is put the economy first, build better relationships, and just give business owners incentives to do business here.
Mm-hmm.
If the economy doesn't turn, businesses don't thrive. Big businesses don't want to come. If they don't want to come here, you're not going to see the engine move. Mm-hmm. Right? You putting all this red tape, you putting all these restrictions, you putting all these taxes in place. There's no incentive for businesses to come here.
Yeah.
Right.
Once this is settled, more positive sentiment. I think getting into land is a big investment, but I think at the end of the day, it's going to be something that's going to be very beneficial. And
you're going to see
so many tradesmen. There's so many of these
booming
jobs, right? That are going to be.
That's why a lot of our investors that we're talking to that have cash that are buying right now, they understand all of this because they've seen this before. Yeah. They've seen it in the early 90s. They've seen it when interest rates were in the 1980s, early 1980s. They've been through these cycles before. There are some things that are very similar. When the economy is dead or dying, you have to start the engine again. And in order to do that, you have to cut the red tape, lower interest rates, give incentives, lower tax rates. And they'll tax us again and they'll bring the red tape again. But it's, you know what I mean? So I think that's why a lot of the buyers that are buying right now, they understand this. So if they've got cash and they can get good deals, they're buying it. Yeah.
But that's the mindset. Be long-term, incentivized, right? It's not something that you want to flip in 2 years or something like that. This is a long-term game.
Well, you can't because you're going to get taxed now 20%.
Exactly. Now, lastly, I should mention, how do you think the Canadian federal election is going to affect the real estate market, especially for farms?
Yeah, I think, I don't know, I was looking at a poll yesterday, and they're saying now the Liberals are ahead of Conservatives. I think it doesn't matter who wins. I was really wanting Conservative to win before because of the policies and things like that. You see what Liberals are doing? They're doing everything. They're putting in play everything the Conservatives were saying. They're actually not only putting in play, they're also saying the same thing. To be honest, I don't think it's going to matter who wins. Is it going to be Liberal or Conservative? I think they both have the same agenda. Turn the economy on, turn the taps on, cut the red tape, get things moving. It's going to be a net positive. It doesn't matter whoever wins out of the two.
But it was necessary. That pressure allowed this mindset to happen.
Correct.
Right? This change.
So, and I do thank the Conservative Party for doing that. They are the ones that really pushed the narrative. I think they mimicked Trump, to be honest, but they pushed that narrative. And now look, imagine if we had not relied on the U.S. for the last 3-4 years. Imagine if we had a lot of this infrastructure already built. We wouldn't care what the U.S. does. Well, it still would affect us. They are still one of our biggest trading partners, but we wouldn't be relying on them that much. We'd have the infrastructure built. Now we're starting to think that we have to build the infrastructure. It still might take, until we start hitting the high booms again, it still might take 3 to 5 years. It's not going to happen overnight, like you said. So elections, to be honest, I don't think it's going to affect any. Things are still going to be the same because they have the same agenda now. It's just, who do you like better, right?
Awesome. Well, that pretty much summarizes what we're expecting here for the next quarter and kind of goes over what we had gone through here in Q1. I'm optimistic overall, and I do think that at the end of the day, when the tariffs are either rolled out and finally conclude, there's going to be a boom happening here, and I think a lot of people are waiting for that. But be prepared either way. It could be in April, it could be in August, it could be at the end of the year, but it is coming.
I agree.